welcome. Today we are going to talk to Feroze Azeez about what is better, an arbitrage fund or a liquid fund, and of course the features of both those. Feroze, to begin with, can you tell our viewers what is a liquid fund?
Liquid fund is a fund which invests for the short term. If you have monies, liquid monies, which you want to park for 2, 4, 5 days, or as long as a couple of months, you can choose a liquid fund. A liquid fund in turn invests in debt market instruments, lends for the short term in the form of treasury bills, lending to central government or to the RBI and to some corporates in the short run. So liquid fund is a group of securities created by the fund manager from a purpose of investing for short-term interest. So that's a liquid fund where people end up using it even for a weekend parking. Large corporates park their monies on a Friday, maybe take it back on Tuesday to earn some interest, which is relatively better than a current or a savings account in the meantime when they don't need the money.
Obviously, this is an instrument that's used for short-term investments. Very similar as an arbitrage fund. Can you define an arbitrage fund for us and tell us how is that different from a liquid fund?
An arbitrage fund tries to achieve the same purpose of investing monies for the short run, but relatively it has a marginally more longer kind of a time frame. You can't invest in an arbitrage fund for 4 or 5 days. It is for a month and a half and above. Now coming to what does it do, point 2 is that it goes into equity markets and hedges it completely using the futures market. That is why the nomenclature arbitrage. It buys in one market, sells the same thing in another market, and tries to take advantage of the price differential between the two markets, namely cash and the futures market. That's why it's called an arbitrage fund, point 2. Point 3 is an arbitrage fund is marginally more riskier than liquid fund because it invests in equity and hedges it using futures market. So you might have a few days where there could be a marginal negative return, unlike in a liquid fund, which is far and few between. Point 4 is an arbitrage fund gets a better taxation for the fact that it is an equity instrument with a hedge. Hedge, by which I mean it mitigates the risk completely and tries and only capitalizes on the price difference between the two markets, which is the cash market and the futures market.
Feroze, what are the key features of both and how does one score above the other? So if you can tell us what's the main advantage of the arbitrage fund and why is that maybe a slightly better preferred option versus a liquid fund?
The one biggest advantage of an arbitrage fund, which makes the differential substantial in certain cases, is the differential taxation. The tax treatment for an arbitrage fund is equity taxation, and for debt is and for liquid fund is debt taxation. Equity taxation automatically implies that you have a 10% dividend distribution tax and you have a 15% short-term capital gain and 10% long-term capital gain. Even after equity becoming taxable, it has a differential taxation which is large enough. And on the liquid fund side, there is debt taxation, which means there is a 35.66% taxation for a person in the highest tax bracket for a short-term investment. So taxation is the first differential. Second differential is liquid funds are going to be far lower on cost than an arbitrage fund. So you'll have to be careful when you're buying an arbitrage fund, if at all you choose to, that the cost is higher on the arbitrage fund side. Point 3 is the risk is marginally more in the arbitrage fund, and it could be it's a very large aberration for a liquid fund to lose money even on a one-day basis, but arbitrage funds end up having a negative return for a couple of days in a month for sure. Point 4 is that exit loads generally are not there in liquid fund, but arbitrage funds have exit loads, so you have to be careful to make an arbitrage fund choice to make sure that you don't have a 3-month exit load and you end up spending some money in case you redeemed your money before 90 days and the 3-month period. These are the few future features you have to keep in mind if you have to optimize the liquidity which you have in your bank account.
Feroze, what sort of retail investors would be looking to invest in a liquid or an arbitrage fund? Because these are very popular investments for large corporates with a quantum of money invested or, sitting around is much larger. I mean, do these options even matter for a retail investor?
Yes, it does, Samina. I think it certainly does to most of us. For two purposes. One is all of us end up having a contingency fund in our personal finance objective, because if there is a surprise, you always need few months' salary in your bank account. So leaving it in a bank account is suboptimal. So leaving it in an arbitrage fund, your contingency fund from a personal finance objective perspective is a good idea. So it has one relevance of investing your contingency fund. The second relevance is, as we progress 5 years, 10 years, 15 years, living this journey of managing your money, you will certainly have pockets when you have more money than you need for a 10, 15, 20 month, 20-day period. For example, if you have to pay a builder for the house you're buying, you might want to delay that payment by 10, 15 days because he's not asking for it. In that interim, making some money out of that is a good idea. So arbitrage and liquid fund or a short-term parking has relevance for most retail investors as well, from these two contexts being applied on their lives.
I know it's always tough without, of course, adapting this to a specific situation, but what do you prefer in terms of a short-term investment? Is it liquid or is it an arbitrage?
I strongly prefer an arbitrage fund. Of course, this is as we speak. Okay, maybe 2 years from now the preference might change, or in the past it might have been marginally different. But as we speak, an arbitrage fund on the post-tax basis, at least for a person who is in the highest tax bracket, if at all you are as a viewer, then you have to choose an arbitrage fund. Because we back tested it, and the surprising results on a 3-month basis, 92% of the times an arbitrage fund has beaten a liquid fund. On a 6-month basis, 95% of the times it has beaten an arbitrage fund. Liquid funds have been beaten by an arbitrage fund. On a 1-year basis, it has been almost 99% of the times it has beaten. Arbitrage fund has beaten a liquid fund for a person in the highest tax bracket. If you are in the lowest tax bracket, then using a growth option in the liquid fund could be a better alternative. Or if you are in the tax bracket of 0, then definitely choosing a liquid fund is a good idea.
Right. That's all that you need to know about liquid funds versus arbitrage funds and why Feroze prefers one over the other. With that, completely out of time. Thanks for watching.